do a Roth and add some crypto. What do I mean by that? You could sum up the appeal of a Roth IRA in 3 words. 3 very simple, beautiful words. Federal tax benefits. Now think about that. Add on top of that the new potential of huge earnings in cryptocurrency. You have an unbelievably powerful combination. Hey, my name is Kenner French. I'm with vastsolutionsgroup.com, where we do tax finance and artificial intelligence to help lower tax liability for entrepreneurs, really for the solo entrepreneur. We do business all over the country. Earnings in a Roth IRA grow tax-free as long as the owner abides by the various different rules that the I.R.S. mandates. You have to take into account withdrawal rules. The whole list goes on. But really, what I would say is it makes a lot of sense in looking at a Roth IRA, because especially if you're doing cryptocurrency, which might have a huge run up. Because then, when you take the money out, tax free, beautiful term, tax free. You put it in, you pay taxes on it in a Roth IRA. But then again, as a reminder, when you pull it out, tax-free. You don't have to worry about it. You don't get the tax favor up front because you have to pay the taxes. But again, when you pull it out, generally speaking, it's tax-free as long as you abide by all the rules. Now, unfortunately, some people make too much money to contribute to a Roth IRA or IRA in general. In 2021, joint filers with modified adjusted gross incomes of more than $206,000 are not eligible to put money in to a Roth IRA, and that's what we'll be talking about a little bit today. There is a way for high wage earners to bypass these limits. However, it's called the Backdoor Roth strategy, and you can call the office, and that's 888-808-8278 if you have any questions, because we're going to go into that very briefly here. But anyway, high-income taxpayers may create Roth IRAs indirectly. This involves a little maneuvering, maybe a little interest to certain investors, but wow, it can make a lot of sense in a lot of other circumstances. Let's talk about the backdoor IRA strategy. It typically starts with the creation of what's called the traditional IRA. There you get a deduction when you put money in. But now let's delve into a little bit more of the strategy. The contributions to this new IRA are usually non-deductible because the IRA's owners are, the high modified gross adjusted income. So you're making too much money. It's not deductible, therefore. For someone in a typical wage, it would be deductible, but in this case, it's not non-deductible. Now, this new traditional IRA is fully or partly funded, and with a financial professional's help, it's quickly converted to a Roth IRA. Now, any tax liability is paid then and due at the end of the end of the year when you normally pay your taxes. Now, sometimes finding an investment professional who has knowledge in cryptocurrencies is a challenge, but they're out there. And now, backdoor Roth IRAs are great potential environments for crypto. Again, why? Because you don't have to worry about taxes, and if there's a huge run up, you pull the money out, you don't have to worry about taxes. Now, I kind of mentioned you have to do it quickly. Quickly convert to a Roth IRA. Why does that matter? Well, the longer it takes to convert the traditional IRA into the Roth IRA, the greater the potential of earnings of that traditional IRA. You don't want that. You really should do it all in one day. Since any traditional IRA earnings converted over to the Roth represent taxable income, not good, those earnings should be minimal if the transfer is completed right at the same time, basically. Now, I'm going to remind you in the example noted above, the IRA contribution is made with after-tax dollars anyway, so the initial contribution amount is subject to federal taxes. Now, another strategy to legally do this strategy is to get around the mandate by taking part of your adopting a 401k or a Roth 401k to be exact, which does not come with such limits. So meaning you can put away up to, depending on your age, $19,500. Now, the pioneer of the Roth 401k, allowing for cryptocurrency as investments such as Bitcoin, I should say, was us, vastsolutionsgroup.com. We started a website really to help people understand, crypto investing into 401ks, and we became the first vendor that allowed cryptocurrency investments in Roth 401ks and traditional 401ks. Now, what I would say is all these strategies are really, really, really for people who are pretty sophisticated. Even those who are sophisticated might need some help. Why am I saying that? Go to your investment advisor, go to your tax advisor if you need some help, because there are some unbelievably solid strategies out there. And again, if you want to do any research, go to vastsolutionsgroup.com. What I would say is, tax rules are also always changing. There's no guarantee that the tax treatment of Roths and traditional Roths, or I should say, traditional IRAs will remain the same. You just never know. Now, the big attraction is the potential for tax-free retirement income, not to mention tax-free growth for the account. If we're talking about Roth IRAs, or even again Roth 401ks. In addition, while mandatory annual withdrawals are required from traditional IRAs starting at age 72 as we speak, no mandatory annual withdrawals are required from Roth IRAs while the original owner is alive. Under the Secure Act, which happened a while back, most non-spouse beneficiaries of Roth IRAs are required to have funds distributed to them by the 10th calendar year following the year of the original owner's death. That's worth noting. Any Roth IRA conversion, what does that mean? It's a taxable event, so that's worth noting. And these conversions cannot be undone anymore. That given, think about the basic rule for traditional IRAs. Now, generally distributions from traditional IRAs must begin once you reach age 72 now, and the money distributed to you is taxed as ordinary income tax. So whatever your ordinary income tax is at that rate when you pull the money out, that's what you're taxed at. When such distributions are taken before age 59 and a half, they may be subject to a 10% federal income tax penalty. Maybe. There's ways around that, legally, by the way. A Roth IRA, when combined with crypto, is especially nice because, again, the taxes are generally already paid, so you don't have to worry about it because all the gains are tax-free. That's nice, Now, what I would say, if you have any questions, talk to your financial advisor. Ask us. We're here, 888-808-8278, extension 700. We're here to help you. VastSolutionsGroup.com has been doing, qualified plans, Roth 401ks for some time. We know exactly what we're doing. We're over a 53-year-old company. We know what we're doing. If you want any information on me, go to rkennerfrench.com. But otherwise, you can get most of your information at vastsolutionsgroup.com. It's been a pleasure. Hopefully this has been helpful in some way. If you need anything, please feel free to reach out. Once again, Kenner French, signing off.